Zweiter Teil unserer dreiteiligen Gesprächsserie Brand-Voice mit Konstantin Leidman, Portfolio Manager bei Wellington Management. Wir sprechen über einen Market Outlook und seine Investment Strategy. Konstantin, you're a high-yield portfolio manager, and high-yield investing is often perceived as particularly challenging. What do you think are the key complexities involved in navigating this market right now?
Yeah. Well, the complexities are always similar in high yield, and it's really you taking the risk of defaults. So as a manager, you need to be able to navigate those risks and avoid the companies which will permanently destroy capital.
And what is your specific frameworks or strategies you have to put into place to minimize the risk of defaults right now?
Yeah, so we always focused on keeping the bar high. What I mean by that is keeping the quality of the companies, of the businesses that we invest in the portfolio very, very high, and not from the rating perspective, but from underlying economic fundamentals of the business. So we use the framework of competitive advantages, or moats, to pick the businesses that we invest in. And another thing that we're trying to do for our clients is to avoid the sectors and regions where defaults are likely to be concentrated when the next recession comes. And we're not sure exactly when it will come, but they always migrate. So we want to avoid those industries that have seen massive expansion of capacity and where economic profits will not live up to the expectations.
How should investors think about allocating to high yield within a broader and diversified portfolio?
Well, investors traditionally looked at high yield as an asset class that delivers very solid income, traditionally with low volatility as well. So it compares very attractively to other asset classes like equities or investment grade. So investors first and foremost seek income in high yield securities.
Konstantin, in recent articles you expressed optimism about opportunities in the high yield market. What excites you about the outlook for high yields in 25 and beyond?
I think the most exciting thing is that we went through the period of high inflation, and that seems to be over. We are navigating pretty good soft landing in the economy. So as long as we continue to avoid having a default cycle, which is our base case scenario, high yield is very attractive.
And the current market environment is highly dynamic, talking about a recession. How do you adjust your investment strategy to account the regional and sector differences in the high yield sector?
Yeah, so we look to avoid those countries that have accumulated large economic imbalances, but we don't really see any particular problems in Europe today. Most of the problems we see are within specific emerging markets. And on the sector approach, you, as a credit manager, you need to be very skeptical when people are excited about certain things. Like today, for example, everyone is very excited about artificial intelligence and data centers and everything, semiconductors. Everyone wants to be the next NVIDIA. So these are the areas which we approach with a lot of skepticism. We think the history is very likely to repeat itself, and it's a sector that's exhibiting a very clear capital cycle that we should stay away from.
Okay. Let me give you just one single and last question. If you have two kinds of portfolio manager and you have two flower baskets, you give them to an equity manager, they're going to have a wedding or a party. If you give them to a bond manager, he's going to a funeral. So what does this say about your way of working?
This is a great analogy, and I completely agree with you. So I'm definitely the attendee of a funeral. But no, what makes it very, very difficult in bond investing, your upside is capped. If you are an equity portfolio manager and you don't own a stock and it doubles and triples on you, you underperform, right? Yeah. This doesn't happen in bonds. Yeah. You normally just clip the coupon, and when you make an investment mistake, you lose a lot of money. So there is a lot of downside and very limited upside. So that's why I need to be skeptical about the world, not optimistic as my equity colleagues are.
Really, but is it your real DNA in private life too to be always skeptical?
No, it's not my DNA at all in private life. I think, we get through various crises like COVID, like wars, like recessions, and the world doesn't stop, right? And that gives me an opportunity when, to put my optimistic hat on in the middle of the crisis and look for the opportunities.
Perfect. Thank you very much. Meine Damen und Herren, das war der zweite Teil. Im dritten Teil besprechen wir seinen Investmentansatz und porträtieren den Fonds, den European High-Yield Bond Fund.